everyone, Zach Pakoff here, and welcome back to another lesson video. Today, I will be going over the 3-1 work together. So let's jump right into the video. Okay, so as I had stated before, I'm going to be going over the 3-1 work together. In the last video, I read over the 3-1 text. If you did miss that video for any reason, please click the link in the description. But anyway, today I will be going over the 3-1 work together, where we will be journalizing entries in a 5-column journal. So the instructions say, a journal is given in the working papers. Your instructor will guide you through the following example. Norm Durner owns Durner Copy Center, which uses the following accounts. Alright, so if you look here, we have a bunch of accounts that are listed here. So the accounts that are listed are cash, accounts receivable, L row, supplies, prepaid insurance, accounts payable, Palm Supply, Norm Durner Capital, Norm Durner Drawing, Sales, Miscellaneous Expense, Rent Expense, and Utilities Expense. We also are given 2 transactions, and it says down here for number 1, journalize each transaction completed during April of the current year. Use page 1 of the journal. Source documents are abbreviated as follows. Check C, receipt R. Save your work to complete work together 3-2. Okay, so I have already created a 5-column journal on Google Sheets. So here it is. And I did this so that way you wouldn't have to see me creating a 5-column journal over and over again. So the first thing that we're going to do is put in the page number for our journal. It's page 1. Now we can get into the transactions for this work together. So this first transaction reads, on April 1st, received cash from owner as an investment, $1,500, receipt number 1. Alright, so for this transaction, the first thing that we're going to do is put in the date. So the date is April 1st of the current year, and the current year is 2021. Now, for our account title, we are going to put in the owner's capital account, which is Norm Durner Capital. Our document number is R1 for receipt 1. We haven't learned about post references yet. We'll be dealing with those later. Okay, now we have to determine what account gets debited and what account gets credited. So the transaction read that we received cash from the owner as an investment, and the amount was $1,500. So anytime that we receive cash, that means that our cash account is going up or being increased. So for this transaction, we are going to debit $1,500 for cash, and then we're going to credit the owner's capital account, which in this case is Norm Durner Capital, for the same amount. Now, for this transaction, if you remember from when I read over the text in Chapter 2, we have an increase for both of these accounts. So since cash is an asset, it has a normal debit balance. So it increases by a debit and decreases by a credit. Whereas on the flip side, for the owner's capital account, which in this case is Norm Durner Capital, the owner's capital account is part of owner's equity. So it has a normal credit balance. So it increases by a credit and decreases by a debit. So that was the first transaction. This next transaction reads, on April 2nd, paid cash for supplies, $375. Check number 1. Okay, so for this transaction, we don't need to write in the month or the year again. We just need to put in the day for which this transaction is occurring. So it's on the 2nd, not 3rd. For this account title, we are going to put in supplies. Our document number is C1. Now we have to determine what account gets debited and what account gets credited. So the transaction read that we paid cash for supplies and the amount was $375. So anytime that we pay cash for something, that means that our cash account is going down or being decreased. So for this transaction, we are going to debit supplies for $375, and then we're going to credit cash for the same amount. Now, for this transaction, again, if you remember from when I read over the Chapter 2 text, we have an increase and a decrease for this transaction. So since these accounts are both assets, they have normal debit balances. So they increase by a debit and decrease by a credit. But if you remember, since we have paid cash for supplies, our supplies account is going up or being increased, and our cash account is going down or being decreased. Okay, so that is the end of the 3-1 work together. In the next video, I will be going over the 3-2 text. All right, thank you.